Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Wednesday, March 20th, 2013. Well, this is a budget special. We had the UK budget earlier today and the key takeaways really are that yes, growth has been revised down. In fact, the growth forecast for this year has been slashed in half to just 0.6%. With 1.8% for 2014. However, relatively speaking, that's fairly good growth. In fact, out of the Eurozone, the US, the UK is coming second, so it's well ahead of some of those Eurozone countries, which has limited its negative effect. Now, we also got a change to the Bank of England's remit. However, it wasn't nearly as dovish as some expected. The CPI target will remain at 2%. However, the BOE will have to do more Fed-like activity, so it will need to actually write a letter to the Chancellor when the minutes are released. If inflation is above 2%, remember right now it's 2.8%, to explain when it thinks inflation will fall back to target. So there is a little bit of room for flexibility there. But after the BOE minutes that we got today, it seems like the bank is actually becoming less supportive of QE, with some people getting a bit concerned about the inflationary impact of QE and also with the impact of a weaker sterling. So all in all, that's helped sterling to just, or it's just helped to kind of reinforce the bottom that we put in the pound, especially in cable, the pound dollar rate last week. Let's take a quick look at that chart. This is a daily chart. As you can see here, the 148.30, that was the low from last week. That now looks like a medium-term bottom. Why do I think it's medium-term? Take a look at the RSI chart above there. That's also had a really nice move higher, suggesting that we were deep into oversold territory at when we got below 149. Add to that slightly less dovish remit change to the Bank of England and also those slightly less dovish minutes, and we could continue this extension. Right now we're at 151.5 after that budget. We do know that in the near to or in the next few days, key resistance levels to watch include 152.20. That has been the high that's thwarted the bulls so far, and also 152.80. Now we're not looking for a massive push higher. Obviously, the budget kind of reinforced that. But what we do think the budget did to help sterling was actually be slightly more growth positive. The tax side of things, there were a few more giveaways than we expected, including an increase in the personal allowance to 10,000 a year earlier than expected. That will come into force next year. We also saw a cut to the corporation tax rate to 20%, which will be enforced in 2014 and 15. And we also saw on the spending side some positive signs coming out of home builders, for example. There'll be a big capital benefit scheme to try and underwrite some mortgages there for new home builds. And we also saw some greater investment spending and obviously pay rises for the public, pay cuts, for the public sector. So all in all, fiscally neutral budget, but slightly more upbeat than we expected, which is sterling positive in the medium term. Now, also in the backdrop to this budget that the Chancellor was delivering, of course, there's ongoing negotiations with Cyprus. We haven't had anything concrete out of there yet. We know that the finance minister is still over in Russia. He's going to stay for as long as it will take. So there's still a prospect that Russia will provide the extra bailout money for Cyprus. What we have heard from the EU today is that they are going to stick to their 10 billion. Merkel also, or the German Chancellor also suggested that there will have to be some form of bail-in. So Cypriot banks will have to provide some of the bailout money. Now, what has this done to Europe? Well, to the euro? Well, actually, after yesterday's no vote in the Cyprus Parliament, we're in recovery mode right now. We're very stable. It's been a fairly muted reaction. We bounced off those lows at 128.50, and since then we've recovered to around 129.5, 129.70 has been the near-term support. So we have fallen back from that 130 handle. However, we haven't fallen off a complete cliff. Obviously, though, even though we are in recovery mode, and we do think that low has been put in there at 128.5. We are still very vulnerable to further declines in the euro, sharp declines in the euro as and when we get details of what's going to happen next to Cyprus. There's still a lot of uncertainty out there, and we do think there could be further declines in the euro based on the news flow that comes out of Cyprus. We also think that the rally, if we don't get a daily or at least a weekly close at the end of this week above 130, the rally will look quite tentative, as if and on any strength we could see some profit taking and some selling interest the closer we get to that 130 level. So do watch out for that. But overall, good luck trading today. Lots of fundamental data to digest, and please do join us tomorrow for more. Thank you.